Hey traders, welcome to the daily macro review. It is about 4 o'clock in Chicago. We are on the 5th of January. Let's take a look at a few charts. I'm going to spend a little bit of time here by taking a look at the Motive Wave software and just go through some counts. I want to spend a little bit of time talking about gold as well and silver out there. Maybe take a quick look at oil and some of the markets that we haven't talked a little bit in a while here in the videos. So the S&P 500, you're looking at the 1 hour chart since about September 2022. This is the latest rally since the markets have established a low on October 13th. This move in here, we looked at it as a corrective move, as more of a B wave from a larger complex correction that's supposedly going to finish up a wave 2. We'll see if that's the case or not, but that's your wave A decline, that's your wave B, and then we're looking for a much larger C wave that should take the S&P 500 towards 3,000, 3,200 in that neighborhood for now. Now, we have broken below this line right here. I don't know exactly what date it was, but, it was a pretty nice kind of corrective trending channel. The markets broke through it impulsively in a large kind of sell-off, and we're counting this as a wave 3. And then, so that's a 1, a 2, a large 3, a 4, and a 5. Now, this is the cash market I'm talking about. So now we reached lows here at about 37.64. And right now the market, it's kind of stuck here at this level at about 3,800. 37.95, 3,800. We can't seem to break below this level. We've tried several times. Now here you can see that we have a very nice, again, just another pretty well-formed corrective channel, pretty well-formed, as they call it in technical analysis, a more of a bearish flag type formation, which is forming against a declining trend. You've also said we've also had a correction back here. We broke below it. Now we have another correction here at a smaller degree, and then we're going to try to kind of break this down. Now it hasn't happened yet, but once it does, we should be starting to move somewhere a fib multiple of this, let's say the second wave. So I'm on a log scale, doesn't matter, but I can just do a 3v1. So for example, 100% equality with that wave 1 drop would be 35.5. A 161.8 sell-off will take us towards 33.72. So those are sharp declines. I mean, if you're getting all the way back to 33.72, it's a big deal. If I change it to an arithmetic, it takes you to 33.28. So, 50 points different, doesn't really matter here on the smaller time frames. So this would be the initial target if the wave 2 top is kind of forming here. Now, if I go to a 20-minute chart in here, you will see, there's a little bit of a messy count in here. I saw you guys kind of trying a couple of scenarios in here. This wave 2 could be here. I don't know if it's necessarily here. Maybe this gets formed a little bit better. I guess even under this condition, it's fine. But if we just pick the highest level of this correction, since this hasn't overlapped, then what this probably is, it's probably just a combination zigzag where you go in a wave W, you come down in a Y, and then you push up in an X. And then this is a wave 1 and a wave 2, and now you're beginning, actually you've begun to sell off, a few days back, right here in maybe the first kind of trading day of the year or something like that when we sold off. Now this here is probably, a wave A with a B, C, maybe a triangle here in a B wave position, and then you're pushing higher here in the final 50. If you go maybe to a 5-minute chart, you can play with that and just go decompose that as a correction. So let's see here. There's the final C wave. So you got your 1, 2, 3, 4, 5. So it's an A, B, C, D, and E. So you can do a pretty decent triangle right there. And then, that's what that is, right? You got a 3-wave move here, a 3-wave move up, 3-wave move down, and then up and down. So A, B, C, D, and E. And then with a sharp rise in the wave see if we really want to be, you know, kind of going into the smaller time frames in here. So an extended 1, 2, 3, A, B, C, D, another triangle in here, and then with a short A, with a short fifth wave of wave A, and then you're good. Again, you know, notice in here that you know, the wave 4, you know, if we're discussing a little bit the more of a you know, kind of fourth wave type scenario where it gets into the territory of the wave 1, you know, wave A here kind of got into it, but you know, you're not supposed to finish off a fourth wave. So sometimes in triangles this happens, where wave A will enter in the territory of the wave, you know, of the wave 1, and that could create, you know, a little bit of an issue. But you know, it's generally accepted that that is a you know, an okay approach. You don't find them a lot, but you know, it's usually when that happens, you know, you're starting to kind of have doubts. Can this still be, you know, some kind of a fourth wave, or, you know, do we have, you know, like a different issue here, and maybe something else is taking place. So in hindsight, you know, this is kind of how I'm counting it. A, B, C for a W, going back in an X, and then go up in an A, down in B here, 3-wave decline, and then up in C. You know, you have a 1, 2, 3, 4, 5 in here for a wave 1. Then it looks like there is a complex move in here in a wave 2, and then, you know, then another decline here. So we'll see. The other counts are okay as well. You know, the bottom line is that this is, you know, for all intents and purposes, it seems to be a pretty strong kind of visible corrective pattern here. All right, now what if this doesn't happen? What if, you know, we always kind of have to think about, you know, the other side of the coin here, and you know, what if it doesn't break? Tomorrow morning we have at 7:30 we have my time, 8:30 Eastern time, we have the non-farm payrolls. So, you know, if those job numbers are going to be good, then it's likely markets will sell off. If they're going to be weaker, we're probably going to get a rally. How much of a rally? You know, I got to check the option market and see kind of what's priced in for tomorrow in terms of volatility. But, you know, if you're starting to kind of, for whatever reason, you know, let's say that this is some kind of an end leading down 1, 2, 3, 4, 5, right? And this is your, like a flat in an A, B, and then down in C, something like that. You never know, guys. Listen. So 1, 2, 3, 4, 5 in the leading, then a 1, 2, and then, you know, this thing's kind of starts to hammer higher. Now, since you can do, since you're still below these levels, you know, we're still going to be looking at this as an impulse and a correction, but instead this will be wave A. Let's say of a leading diagonal, this would be a flat, let's say in B wave right there, and then you're going to climb in C wave. But you want it to stay below the 61.8, which is 39.69 at the moment. You know, that kind of we're measuring that. Anything above those levels, it starts to be, you know, like a bigger issue. And, you know, the moment you start to push above those levels right there, you know, that's some pretty big lines, you know, right above 4,000, you know, that means that this will likely start to become a 1, 2, and then you're in a larger third wave higher, you know, something like that. You're going to get a 4 and a 5, and you're beginning to rally upwards, which would be quite unexpected by the way this looks. But the reason I'm presenting this is, you know, what we're expecting from the market, right, based on our analysis, and that's why we're going with the 1, 2, because that's visibly, you know, what seems to be a corrective pattern. The markets at times will surprise you and explode higher out of what looks to be corrective, and you'll be like left in like, what in the world just happened? You know, how come I lost money when this thing was a short thing? And this is kind of how that goes. And, you know, then this whole thing becomes a flat in an ABC, and, you know, that's a 1, 2, 3, 4, 5, and you're going bullish, right? So, always looking at the other side of the argument, as well as much conviction is that I have that this is probably going to continue to break to the downside for all intents and purposes. That's kind of how I'm kind of digesting it at the moment. So anywhere above 61.8 in here, it's probably not going to be a, you know, probably going to have to kind of switch more to a bullish stance and you know, find alternate counts like I've showed you before. Let me just get a sip of coffee. All right, so that's just a quick analysis here in the S&P 500. You know, we'll see where we are tomorrow on this. you know, short positions here, sure, you know, once you're starting to kind of break below this, we haven't broken yet, but once you're starting to kind of break and extend a little bit in here, you can, you know, that would be a moment to initiate short positions below 37.64. You're probably going to get, usually what happens is, you know, even if you sell off, sometimes you get a retest, sometimes you don't. You know, but let's say you initiate half of a position, then you add on the retest, and then you look for a break lower, and then if this is a failed breakout for whatever reason, you know, what if this is still a fourth wave and you're doing a fifth and then you're recovering? You know, if you don't want to sit through this correction, which I wouldn't recommend, then, you know, once you get back inside the channel, you got to get out of there. All right, so that's kind of how I'm thinking about the S&P 500. You know, I don't know if I'm going to go to NDX because it's the same story. It looks much, much weaker. I mean, we can look at the daily close right here with a little bit of a gap lower as well. You know, just a bad market. It's truthfully still into support, you know, right here. But, you know, again, you had Microsoft, you had Tesla, you had Apple, you know, kind of all selling lower again. And it was just a mess in the, mostly in the NASDAQ stocks today. You know, again, you know, I think this is the first one that kind of breaks. And I put on Twitter a comment. I said, you know, what's interesting is that, you know, if you look at the VIX, so the VIX here, it's basically sitting at about 2270, right? It's still, I mean, it's elevated, but for you know, historically for the S&P 500, but it's still very low. So look where we are, right? And this is where the previous, you know, major lows that we've got into the market. Now, we're very, very close to the low in the NASDAQ. And mind you, yeah, this is the VIX for the S&P 500, but they're probably not that different. I don't have the VIX for the NASDAQ right here. I think it's VXN. Let me see. Yeah. No, that's not it. Anyway, I don't have it. I got to search it up. But, you know, it doesn't matter. It's pretty much the same story with it as well. So imagine what will happen to the stocks. You know, if they're near the lows, right, like that, then you're having a little bit of a bearish, and you know, you're basically just kind of almost waiting to break, and this is here, right? Well, if this starts shooting higher, right, and fear comes in, I mean, that's how you get the third wave lower, right? You got to get this VIX to cooperate. So far, it's still fairly muted. Maybe it's waiting for tomorrow. Maybe it's waiting for next week's CPI data. Who knows? But, you know, it's a sign here that, you know, that it's got room to go, you know, that's got room to go further from the fact that it's here at this support line. So just kind of showing you what's going on in the VIX. Russell, you know, with another, I would say, you know, not a super happy day today in it as well. And then Dow Jones, just looking at the candlestick weekly and seeing here, that rejection almost looks like it wants to break here. Let's just take a look here at the futures on the US 30 really quickly, because I was going to update this in the morning, but I wanted to see kind of how we closed today. So look at that, right? We were, you know, talking about how this is still a, you know, very kind of heavy formation on the downside, and we're looking, you know, for this kind of sell-off to start to go. Still a big support right there, you know. So it hasn't really cracked it. They tried to do it today, and I'm very curious what's tomorrow. What if this is an A, a big B, and then, you know, we're still getting that tomorrow? That's the risk that we're going to be running here on the short side. If these supports hold, and actually markets have some good news and squeezes higher, and only then, you know, you're starting to come back. So we'll see. I'm very, very interested in how this is going to pan out. The other one is, if you remember, right, it's an A, B, C, D, E with a C wave up there, right? That's kind of my main interpretation. You know what? I'm going to switch this to, let me switch to high, low, and closes, because I can squeeze more bars in, and I can go then to a 20-minute chart and discuss this formation a little bit. I think it's helpful just so, you know, you can see a little bit how we're looking at the smaller time frames and see how things kind of stand. So that's your wave 2 right there. And maybe I talked about this before, I apologize, but correction right in a wave A, and then you know, a wave B in here. Let's see, or here, let's see, B, C. So then you get an A, B, C. Let's see something really quickly. Yeah, you broke below, so that could be fine. So an A, B, you know, C. So A, B, CDE, with just a little low there. And then this is not a C wave right there. So maybe that's a WXY. Same kind of a structure. I was thinking to push this B wave over and then make this into an ending diagonal, like 1, 2, 3, 4, and 5, something like that, back in there. So either way, that would be the idea. Just like you saw on the S&P 500, either one works. And then this would be your first decline in a 1, 2, and then now you're beginning 1, 2, 3, 4, 5, and then you're starting to, to kind of break to the downside. But big corrective move, big corrective move. I'm always careful with this because I'm always afraid, hey, what if this is, just wave A and this is a complex move in a B and then you're getting that, right? But at least, that's what's cool about Elliott wave. At least kind of where you stand, what can happen, and then, what happens if this doesn't break, then oops, things are probably going to push higher. If you're trading shorter term, time to get out. Anyway, big resistance here also. So let's talk a little bit about gold. The dollar I'm not going to touch on. I talked about it this morning. 10-year U.S. notes are, fine. Maybe I think we've had a little bit of a sell-off back in yields today, maybe. But let's take a look at gold. And we've had a little bit of a talk in gold. I mean, that's a larger kind of count where I keep it as an alternate, where this could be maybe like a big fat running triangle happening in gold that could take another 10 years to unfold. On the count side, in the one that we're bearish on, and we opened a GLD position yesterday or the day before, was it? So we're still short on that, and that's a market that we're shorting there. And we're basing this off on the fact that we're looking at this as a wave 2 in a flat. In an A, either you put B wave here or you do it back there, doesn't matter. You're pushing higher here. And, I was kind of talking about this formation in here and kind of how it breaks and all of that, and pushing higher in that, kind of final wave C of 2. Now, if you look at the larger time frames in here, and I can go, let me go on let me just stay here for right now. This is the weekly time frames, right? And we have only tomorrow. So this back here, it's a very important rejection from those higher levels right there, right? Because it appears on the weekly charts. The higher it appears, the more powerful it is, just like the one back there. Now, this one, it's a bit smaller. We'll see how we close tomorrow because that's going to be important. Also, I caution on this RSI at 60 in a downtrend. It's levels where you want to sell the market. Okay. So based on this, and based on the fact that I'm looking at this as a double top, and this is a 1-2, I'm looking for gold to get trashed to the downside, right? That's the, that's the idea behind this short here. Okay. That it would go, and it would not just going to stop at 1600. You're actually going to come below there and start to do something like that and come towards whatever, maybe back somewhere in this neighborhood, 1300, 1200, something like that, maybe even all the way back to these lows. All right. Now look, what you're seeing here, it's the yearly chart. It's an yearly chart in here, right? So you went up 1, 2, 3, 4, 5 years, from 2016 to 2020, 2021, and then, you started to pause, and you had a little bit of a bearish candle in here, and now you have another doji. This shows a market that's got a major indecision here, right? It doesn't know what to do after a rally. Now, if this happens after a rally, I don't know. To me, that is bearish because, this tells you that the bears, the bulls have nothing on to continue to push this market higher. Now, that's on the yearly time frame. If we drop down to a monthly, you see this level here. Big reversal formation out of there. It led to this move in here. You had that doji, big evening star out of there again from the same level. So double test of that level, and then they sold it off. Now, we're pulling back in here. And we're pulling back in terms of retracement, 61.8. Okay. So, all right, fine. You want to get it out of there, close to 61.8, 1896 if he wants to push it, a little bit more higher. But we're in the neighborhood of that zone. And now I'm looking at 3 candles here that even on the monthly time frames are losing a bit of a momentum. We'll see because this month just kind of started. But for me, these are bearish signal based on kind of what I showed you so far in this double top in here. Now, I know people want to see, you know, a lot of things in this market, and they could say, fine, you know, this is a, you know, it's a cup and handle. And, you know, instead of being, you know, a bearish move, you have the cup in here, you know, and then you have the handle right there, you know, and now, you know, this, what this does is you're basically breaking and you're pushing to 4,000 like that. Now, this is what usually happens after kind of this kind of cup and handle formations. It's possible, but you know, and especially, I mean, you can see we have a little bit of a bullish engulfing here on the 3 months. So there's a lot of arguments here. There's going to be a lot of fighting if this market, you know, starts to push higher or if it comes lower. And to kind of go back to the point is you can only look at it as a cup and handle formation if this market breaks out of there. Okay, now if you can go long here, it's fine. I mean, I showed you what's the dangers to getting long at these levels and kind of how the market looks. You know, but basically, you know, if you're looking at this as a cup and handle, you know, once you break above this level, then you just buy a retest because you know they're not going to shoot you straight up. Might even have a couple of errors before that happens, right? But at least you know now that gold is up there and it's trying to do something. That's the confirmation that, you know, you want to kind of take a part in and then, you know, let's say enjoy a rally over the next, whatever, 7, 8, 9, 10 years. Who knows how long this is gonna go, because this is, if this pans out, right, it's a huge move, you know, to kind of continue higher. I don't subscribe to that. I don't think gold, it's got, you know, that kind of that power to do that. You know, it had this beautiful rally here, you know, from whatever it was, 200 or 270 all the way up here to, you know, $2,000 almost, right? So definitely, you know, it's done that before. It's done that back here. I don't remember what the monetary policy was back when this was happening, but, you know, right now we are in a kind of very tight, again, just kind of monetary stance here with the increasing the yields and, you know, with the quantitative tightening. And I don't think they're going to give up that easy. We'll see what the inflation data says, but they're still kind of fairly scared about it. Look at the RSI also, you know, what happens there, right? And this is a 3-month chart. That's a loss of momentum. And if you're looking at this time frame, you know, if you want to buy it, you got to buy it back towards 40, which means gold has to drop towards 40 RSI right there. Okay. And then maybe back here, you know, there might be a chance to kind of get something on the long side. So that's my, you know, that's kind of my gold analysis here. And a couple of other things I think I wanted to say. Also, you know, let's take a look at the bullish count, right? Because we have one of those too. Why not? And, you know, the way it looks is like this. And maybe I even go up to a 1 month. Right, so let's say that that's a 1, 2, and, you know, then where is my, 1 second, let me just kind of fix this. I just kind of had to connect those waves to make sure that, you know, that the larger picture appears. So let me go to a 1 month. I'm not sure why I'm not seeing the 1, 2 out of there. Let me go back and see, maybe there's a thing with the visibility in here. Yeah, it's just below 1 month. Let me just show it in all intervals. So now you can kind of see it. I can hide this below 1 month so it just doesn't crowd, and I'm going to delete that as well. So, you know, just a big, let's say, you know, you got the Nixon, you know, you got the petrodollar, blah, blah, you go up in a what is a super cycle, you come back in a, this is probably from the log. It's probably from the log. Hold on a second. Yeah, because I put it up in a log scale. So whatever, you know, that's the wave 1. Let's say that's starting much, much lower back there, right? Since 1960, 1950. And then you do a big wave 2, super cycle degree. Then you go back in a 1 cycle. You come back 2 in the wave 2 cycle. This terminates, you know, right here, whenever this was in 2014 or something, 2015. Let me go back to here. All right, so you can see it just a little bit better. We go to a 1 month now, and, you can see, so that's the second wave. Then you go 1, 2, and 3, 4. And then you still got to do a 1, 2, 3, 4, 5. Then you complete a wave 1 at the primary degree. And then you begin the next larger sequence, right? Because if this is a wave 1, 2, you know, then you can't just have, you know, straight up a third wave here. You got to go with another, you know, subdivision, you know, and I can put that up so it shows at all intervals. So if I go back to a 3-month, right, you'll see it here, 1, 2, 1, 2. I'll switch over there to the log scale. All right, look at that. Look at that gold. Look at that gold beauty. What is it going? All right, so are we, you know, doing something like that where this thing, it's a 1, so 1, 2 cycle, then 1, 2 primary, 3, 4, and 5 for a larger third. You know, that's, you're talking 30,000 gold maybe by 2040, 2050. Who knows what's going to be with the monetary policy, right? But that's kind of the bullish idea on the larger time frame. And to just kind of go back here to maybe a 1 week, this would be then wave 1. You know, that we're counting, because as we're counting it, says we can count it as wave C of a flat. As I showed you, that means that you could also count it as wave 1, right? And which means that you're still going to get some kind of a wave 2 pullback in here. So you're looking at about what, 1700 maybe, come back towards 70. So still a pretty decent trade to the downside. You know, and it doesn't have to come that low, maybe 50% only. And then that would be kind of the next move on the larger third wave to kind of get back like that. So just kind of know what you want. You know, if you're bearish, then you know what to look for and where to get out. If you're bullish on gold, because, you know, there is an argument that this could possibly be fine. You know, but if you start to break below these levels, then you know that that's, you know, that this is bullshit. Okay. And, you just kind of have to be careful with that. But, you know, look at this. Let's see this line, because it maybe lines up pretty good, with these levels. You know, so you got that, you got this back there, you know, so somewhere near 1700 zone, right near 61.8, you know, for a wave 2 pullback out of there. And this could be in 3 waves, might take a couple of months to unfold, and then bam, you know. So the story could be that, yeah, maybe the Fed, you know, the data is so bad that the Fed freaks out. You know, they're stopping increasing of the rates. They're announcing quantitative easing. The dollar goes to shit. You know, everything turns to hell in the next couple of months. And then you're beginning your rally higher in gold. Because if you do, that's how it needs to happen. And you don't have a lot of time, right? So, you know, sure, this wave 1 can continue higher. I mean, I don't say, but it's pretty evident that I think we might be pulling back here. So I just wanted to kind of spend a little bit of time on gold in here, and then I'll show you also kind of what's going on in silver really quickly. So go to silver, and you know, I think this is what's going to happen. You know, that's kind of where I'm at with it. You know, same like in gold, it's a counter trend rally. You know, we're coming back from a pretty decent trend line in here. I'll show you this on EWC count, and you know, let's go to a, let's see here, 1 week. No, 1 week is too much. Maybe 1 day. You know, that's kind of, you know, that's kind of our lower highs. And then this are lower lows, 1, 2, 1, 2. And then let's see if we can kind of smash it to the downside. I don't think I can make a, you know, a leading diagonal out of this whole thing. And I cannot make a wave 1 with an A, B, C as a flat. I think that would be, you know, quite pushy. Even this one, you know, it's got its own issues. But, you know, look, you're at the back 78.6. You're at the trend line in here. You know, if I make this a bit bigger, you know, you can see kind of what's going on in here, how we've got to reject it. If I show you, you know, right there. And if I go to like a 6 hour, right, we had this reversal pattern that I talked about, and gold sold off really well. I mean, this was a very nice trade lower. You know, say that even if you enter on the break of this guy, right, you could still kind of get 3-4% on this trade, you know, given that you're getting out at the moment. But, you know, I'm looking at the RSI also here. It's sitting at about 60 right there, and that's where you're kind of coming off. Then went up to about 60 right there, and that's how you're selling off. So, you know, I don't know. I have my arguments. I want to listen to yours. You know, if you have anything interesting, you know, let me know. I mean, it's definitely, you know, this is the bullish outlook here on, where are you? Right there. Oops, sorry, right there. I think that's my bullish outlook. Where it's a 1-2, going back to a 1 month, big 1-2, go back to a 3 month. Let's do a log, right? going back, let's say, let's squeeze them out, you know. Wave 1 in silver, right, with the brothers, with the cornering the market and coming back in to either there or here, you know, then back up here in a wave 1, you know. So then a 2, so 1 2 1 2 1 2, triple 1 2. What do you want more from silver? That means that it's going to, you know, $230 or even higher, based on you know, based on kind of what's going on here. If I go to a you know, 1 month, just delete that, because that would be pretty much a level that, you know, get excited if we're getting above this B wave. Let me just put it back. 26.95. If they're able to clear that, you know, then I can get on board, you know, with more of a bullish stance. The beauty is here that you pulled back from 61.8, which was at about 1848, and I think 50% was at 1844. So pretty decent kind of move here. And, you know, bulls can argue, yeah, man, you know, this is done, and we're beginning at 1 2. Well, if it's done, then let's break B wave, and let's break that as well. And then, you know, there'll be plenty of room to enjoy a larger third wave to the upside, right? Because that's not going to finish up in a month. It's probably going to take, you know, 7-8 years to unfold, if it goes something like that. Look, this bull market was from 2002, 2003, let's call it, to 2011. So there you go. What if another one just kind of starts from here on out? Anyway, guys, that's just my, you know, couple of cents on this precious metals, on the S&P 500, on the rest of the markets. Appreciate you watching as always, and I'll be talking to you a bit later. Bye-bye.